Let's brew some coffee and try and welcome on board the management at CCL Products. Mr. Praveen, Jaipuriar, CEO, is joining us. Thank you so much for making time and speaking with us. We would have loved to brew a coffee, but it seems like it's getting more and more expensive because the coffee prices are trading at record high levels. What's your own anticipation? Where will they head from here on?
Hello everyone. Thanks for calling me here. It's been choppy waters as far as coffee prices has been is concerned for the last 1.5 2 years, and it's been an uptrend. And we generally had predicted that every time there is a harvest season in the large coffee growing regions like Brazil and Vietnam, there could be certain softening of prices. But that hasn't happened, and things have stayed at the top. And we really can't predict right now. It's only when the Vietnam crop comes in by the time of November and December, we'll get to know that where these prices are headed towards. But as of now, in the short term, we feel that it will keep maintaining the kinds of level that is there currently.
The volatility that we have been seeing in the coffee prices, what are you preferring, short-term contracts or long-term contracts currently with your consumers and clients?
So generally, with our clients, we would prefer long-term contracts because it gives better visibility, and it helps us plan better in terms of the value chain is concerned. So definitely we like long-term contracts, but the clients have been a little on the edge right now because they don't want to commit long term in anticipation that prices could soften later on. And because we do back to back buying, what it would mean is that if we go, or if they go for long term contracts, they would have committed to current levels, so they are in a little wait and watch mode, and not committing to very long term contracts as of now.
Okay, so that's the way forward. Of course, everybody is wary of doing long-term contracts at the moment. But talk to us about the expansion that was underway. You were looking at getting more, more output in certain areas internationally as well as in India. How's that progressed for you? What's the capacity right now? What could it inch up to?
So right now we are up and running with around 71,000 metric tons, including all our capacities across the globe. And there'll be another 6,000 metric tons of freeze dried that will get added in Vietnam in about a couple of months' time, which will mean that by third quarter of this financial, we'll be probably at 77,000 metric tons. So all that is on track, and this capacity expansion is in anticipation of the volume growths that we have been driving internally for ourselves.
But given this, expansion in capacity, what could be the actual volume growth, let's say in FY25? And also, if you can help us guide a bit more in terms of what could be the revenue growth in FY25, sorry.
So, basically, if I were to, go back a couple of years, we had predicted that we will, on a CAGR basis for the next 4 5 years, we are looking at 18 to 20% volume growth, which meant that we would have to double our capacity in 4 5 years time. And that's how we had planned our capacity expansion. So we are staying with that, with that guidance for a long period of time. Yes, this year, because of the coffee prices and the kind of, contracts which have shifted from very long term to short term, we had given a little broader, guidance of 10 to 20% volume growth. And you add another maybe 10% of value to this. So probably we could end up anywhere between 20 to 30% value growth for this year. So that's the kind of volume value projections that we have given for this year.
Understand why you had given this wider volume growth trajectory of 10 to 20% for FY25. But so far in FY25, what has been the volume growth? If you could just give us some brief on that.
Yeah, so the first quarter was around 14-15%. So we are somewhere in between where we had predicted. And that's the reason we have taken a little broad stance. Right now, again, as far as coffee prices are concerned, they are still holding very high. So that kind of a long-term view that we used to have earlier is not there. So we have kind of broadened our guidance.
15% volume growth continued in Q2 as well so far?
Really, we've been on, September has to go. July and August have been reasonably good. So yeah, we should land in between these two numbers in this quarter as well.
Before I let you go, a word on the branded business as to how the growth has been there, because I'm assuming that will be more margin accretive for you. What will be the total revenue share from that basket, and at what rate is it growing?
So, it's growing at a very good clip. This last year, the retail part of the India domestic business was approximately 200 crores. We are looking to hit anything close to 300 crores this year, which will be around almost 40 to 50% growth. So it's growing at a much better clip. Yes, the margins are better there, but we have been kind of reinvesting all that we are earning there because the brand is still at a very nascent stage. We realize that there's a lot of brand building and a lot of distance to be covered before we start milking this whole segment. So yeah, we are looking to kind of invest back. But yeah, at an annual level, probably at a 7-8% EBITDA will be there, which was break even last year and probably was a little negative before that. So yeah, on a continuum basis, the margins are improving. But yeah, we are investing back to build the brand.
Okay, on that note, we let you go. Thanks so much for making time and speaking with us today. So that's the latest at CCL Products. But time now to slip into